Welcome back. Let's discuss the economy now. As manufacturers and MSMEs kickstart a new business year, economic indicators do not look very promising, as many industrialists are still reeling from the difficulties experienced in 2023, when many businesses experienced record losses arising from several factors. Now, in the third quarter of 2023, the total capital importation into Nigeria dropped to 654.65 million dollars. That's lower than the 1,159.67 dollars now recorded in Q3 2022. That's according to the new data now from the National Bureau of Statistics, NBS. And it's about the lowest in the last 10 years in the country. Now, this downward trend amounted to a drastic 43.55% decrease compared to the same period in 2022, signaling a notable shift in the country's investment landscape. In the period being reported, Nigeria was only able to attract foreign direct investment to the tune of $59.77 million. Foreign portfolio investment was $87.11 million, and other investments, of course, accounted for about $500 million or over $500 million. Now, the decline in capital importation depicted in the Q3 2023 data underscores the evolving investment landscape in Nigeria. The government has embarked on an aggressive drive now to attract and sustain foreign investments in the country's diverse sector. Everyone is waiting to see the efforts yield positive results, but the lack of enough foreign investments is taking a toll on the economy, with the country's forex shortage getting worse each passing day. Joining me now to discuss this further is Johnson Chukwu, who is the Managing Director, Cowrie Asset Management Limited. Thank you very much, sir, for your time, and Happy New Year. With regards to foreign investments inflow now, is it going to be a Happy New Year for us?
Well, Happy New Year, DEJI, and to all the viewers and to Nigerians. In terms of capital importation, I doubt if we are going to have reasons to celebrate in the new year. Principally because those factors that have constrained capital importation in the country may not likely change in 2024, among which is the issue of foreign exchange liquidity. You mentioned that in your introduction. And then you look at the differential in the spread between the parallel market and official rate. And then you also look at the declining foreign reserve. Then you consider the fact that our exchange rate has been very unstable in the past couple of years or the past 7 months. The instability in the exchange rate makes it unattractive for investors to come into your market. And fourthly, we have not cleared arrears of unmet foreign capital importation or amounts due to foreign investors that are still trapped with our central bank. So until those 4 items change, you may not likely see foreign investors be so aggressive with Nigerian instruments or investing in the country. You already highlighted the summary of the performance of our external factor when it comes to foreign capital inflow, that we got only $654.65 million in a period of 3 months, which is one of the least we've gotten in the past couple of years.
Now, honestly, the president has embarked on an aggressive drive now to attract foreign investors. We've seen him visit several countries, but concretely speaking, we've not seen these visits now translate to an influx in foreign investors. You look at the current budget as well. The Minister of Finance says, well, that the budget is lined towards that angle. Do you think we're likely to see any change, say maybe by the middle of the year?
You know, the truth is that it's in our collective interest we see a change in the trajectory, and we begin to see capital flow into the country. But the variables, the fundamentals are still are not likely going to change, like I said earlier. The president going around the world seeking for foreign direct investment into the country, it's a good thing because he's the chief marketing officer of the country. But that does not necessarily guarantee that investors will come in. The investors have to look at the fundamental issues. What is your investment climate like? Do you expect to see good returns? If you invest in the country, can you repatriate your capital or your income when you need to repatriate that? Which we all know that the answer for now is no. And then they also look at other socio-economic, social factors, the level of insecurity in the country, the enforcement of law in the country, or effectiveness of the legal system in the country. These are factors that the investors will have to look at. It's not just enough that when you travel to other countries, the investors are brought to take photo up with the President of the Federal Republic of Nigeria. But the key thing is that before they make a final investment decision, they have to look at these factors. Which sector are they going to invest in? What are the settings in those sectors? What's the performance of the economy today? We've seen an economy that is growing at a very weak rate. The third quarter GDP growth rate was 2.54%. But beyond that, you are looking at the external factors that are not if you look at the sector you want to invest in, take for instance the oil and gas sector. You have to deal with the issue of bridge or pipelines. Then you look at the industrial sector. The operators in the industrial sector who have been here for donkey years are leaving, and that is a negative sign for investors who want to come into the country. They will ask the questions: why is P&G leaving? Why is GSK leaving? And other companies that are leaving. Will you go to a country where the existing investors who have made long-term investment commitments are now leaving? So the optics are not quite strong as it relates to expecting that we're going to have material improvement in capital importation in the country in the second half of the year.
Now, paint a vivid picture for us. What impact this is having on the economy, the lack of foreign investments coming in.
Let's take one aspect of it. If you have a strong capital importation in your country, it helps you to stabilize. The major sources of foreign reserve of forex influence in the country are export of your commodities, which in our own instance, export of crude and gas. Second aspect is capital importation, foreign investment, foreign direct investment, and then you look at home remittances from locals in diaspora. If you look at the three factors, the oil sector is also struggling because we saw in November crude oil production decline from about 1.35 million barrels a day to about 1.24 million barrels a day. As it relates to capital importation, which is what we're discussing now, we've seen first quarter capital importation was $1.13 billion. Second quarter was $1.30 billion, and third quarter was only $654.65 million, which implies that the country is struggling to earn enough foreign capital importation or foreign earnings, foreign capital or dollar into the country to stabilize the exchange rate. Without improvement in foreign portfolio investment and other form of capital importation, you are not going to see stability in the exchange rate. Some of the pressures we're facing today is because we're not earning enough foreign exchange from us export of crude, and we're not earning enough foreign exchange from capital importation. So for capital importation would have to some extent stabilized the exchange rate in the event that you have a shortfall in your export earnings.
So we're in for, well, some difficult period ahead.
Yeah, I would say that we need to start addressing the root causes of this problem, which I have mentioned. As it relates to foreign exchange reserve, the shortest route for us is to improve our crude oil production. And that we need to deal with issue of breach of pipelines and issues like that. If we do that, because it has to come from an enduring source, and then we have to look at those other factors that are constraining investment, one of which is insecurity. If we address those things, we begin to hope that probably in the next 1 year, we will see an improvement in capital importation.
So Johnson Chukwu, thank you very much for your time, and thank you for talking to us.
My pleasure.
Well, that's how much we can take on the program this week. We thank you very much for watching. I'll see you again next week. Bye-bye.